Today on Resource Talks, a geologist who manages hundreds of millions of dollars is hopefully going to save me from chasing overpriced discoveries and instill some sense into my ever growing excitement for this bull market in mining equities. Geologist in question is Steve Todoruk. He is one of the most senior managers at Sprott, and he's got a focus on early stage exploration with a simple goal in mind: show up when the rocks do and then disappear before the market cap turns into fairy dust, which should always be your expectation when speculating in the early stages of the mining cycle, as we so often get reminded. And before we get into the conversation or any of that, Steve, though, thank you so much for your time today.
Thanks for having me.
The pleasure is mine, or will be mine, hopefully, as you attempt to save me from myself here. But just briefly for people watching and listening, if you want a summary of this conversation and all the other interviews that we do on Resource Talks, go to resourcetalks.com. There's a free newsletter. It goes out once a week with a bullet point summary of all the conversations from the week before. Steve, before we get into any of it all, I see a lot of people with horrible track records being interviewed a lot out there. And I've done it as well, drank the Kool-Aid, believed the beautiful words before. So I've decided on a new opening question here that I'm going to ask you. Do you or have you actually made money by doing what you're about to be preaching here today? And what's kind of your long-term track record if you have?
Yes, I've been employing the same strategy for quite a while. Rick Rule hired me 22 years ago. So that was about 2003. And I started doing what I'm still doing today, probably about 1987. Three friends and me started a little investment club. And myself was a geologist. My friend was a geologist. His partner was a mining engineer. And then I had another one of my partners that was non-technical. And we decided to start a little investment club and let's do what geologists do. We'd go out and stake some mining properties and then try and option them and joint venture to some juniors and get some shares and cash payments. And then we all agreed that we'd contribute $50 a month into the investment club to start building up cash, the goal being to start buying stocks. And pretty quickly, we optioned a couple of the mining properties, getting some cash. Got lucky, a few of our stocks went up, so we sold those. And short order, we decided it wasn't making a lot of sense to keep adding $50 a month to the club, so we stopped that. But before you know, we had a nice little pot of money and kept optioning some properties. And for whatever reason, when it came time to buying stocks, by default, I tended to be picking most of the stocks, and they tended to be what I call new discovery plays. And we were in Boise Bay, diamond fields and things like that. So I literally started, employing that strategy back in 1987 in that little club. And so by the time Rick offered me a job in 2003, I'd been doing it kind of for 15 years,
Mm.
while I was running two of my own junior mining companies. And the other guys, my partners in the club, said, for some reason, you're pretty good at picking the good stocks, but you don't like to sell. So you pick them, and we're going to decide when to sell them. And they all funny way how it all ended there. One day I'm from Kamloops in British Columbia, and it's where I was born and raised and everything. And I grew up skiing there at the mountain. Today it's called Sun Peaks. And I'd go up visit my parents and come back to Vancouver to go to work Monday morning. And I kept telling my partners, you guys got to go skiing up there one day. It's just spectacular. Whistler's buying the resort. They're going to develop the whole thing. And so they all went up there one weekend and they came back and kind of made the announcement that we had such a good time, we've made a decision. I said, what's that? Well, we've decided that we should sell all our stocks and buy a lot up there and build a big ski chalet type of thing. We're going to call it the Miners Inn. And it was right at the bottom of the ski. You go very top of the hill, right on the longest run, right into our back door and jump in a hot tub type of thing. And I said, really? You want to sell all our stuff? Yep, done deal. We've all agreed. So, okay, I wasn't expecting that one. We actually had Brix in there
Mm.
before it blew up. We made good money on Brix. Just call that whatever kind of luck you had. But I like to point to other ones like Diamond Fields that we had and some other stocks like that. So,
Well,
um, my approach is what I like to say is the most exciting thing and most rewarding thing to investing in the mining industry is if you can get a little exploration company that makes a brand new, big or good looking discovery.
And those are all things I do want to talk about. What is that? Do you track your like a Kager or something like a long term track record or something that you've tracked? Because mining oftentimes takes away more than what it gives. So what's that been for you?
Try rewording that again, just so I.
Well, I'm essentially asking about a CAGR, so a compound annual growth rate, and what kind of the returns have been over time. Because again, mining, although it can give a lot, it can take away a lot. So yeah, is that something like a long term track record? Is that something you've tracked?
I don't really keep record of anything like that. I just know that, if I'm in the good ones, and I'm usually one of the first guys to get into those brand new good looking stocks. I can't give you any kind of, you know, record type of thing. But one of the things, why a lot of people miss the really good new discoveries is because you just look at a stock chart. As soon as they announce a good hole, the better the drill hole, the stronger the stock's going to react. Most people, the investing rule number one is don't chase a stock that's exploded.
Mm-hmm.
My sort of come back to that is, well, I guess you're going to miss most of the good new discoveries because you're not going to announce a really good discovery drill hole. The stock shoots up. It's not going back lower than where it was, so you can say I'm buying it on sale. That's not going to happen. Never does. So
That's exactly what I want to talk about today, actually, because it's essentially just to set the stage. Essentially, $20 million company prints a beautiful assay table, multiple well over 100 gram meter intercepts, and their market gives it a 100% jump in the share price on day one. I start beating myself up for missing out and start thinking of, chasing what looks like the next big thing. Probability, though, still says that I should, I shouldn't be in, that it wouldn't be. But every, not so often, really, it is the next big thing. It does happen. So how do I know if it is worth chasing and paying that premium, which could be 100 or 200% as we just recently saw?
Well, in the case of Aurelian, for example, back, I think that was around 2008, they were a 50-cent stock. They announced that first drill hole. It was just spectacular. And within 3 days, the stock was trading at $3.
Hmm.
I was putting phone calls in. I didn't know anybody in the company. I was trying to get a hold of the CEO. I know he's busier than busy, everybody's new best friend. He finally returned my call 3 days later and stock's at $3. I like what I heard. And I just started buying stock at $3 a share. So, that's up, well, 500% from what it was before. I didn't think twice. I just said, start getting your position. It's the first drill hole. They got 2 years of drilling ahead of them if this thing grows into what I think it's going to be. And 2 years later, it was $30 a share when Kinross took them over. So, yeah, I would have loved to get in at 50 cents or a dollar, but I didn't even think about it. It's just like, get over it. Like I've done that, many times. Philo Corp. I'm not allowed to talk about any current company names I've got my clients invest in, but I can talk about previous ones that are all this same sort of approach. I think when Philo announced their discovery drill hole down in Argentina, maybe 4 years ago, 4.5 years ago now, the first drill hole was something like 1,000 meters of 1% or 1,800 meters of 1%. It's a giant drill hole. And instantly the stock's up around $4 or $5, I think, when I started buying into it. And I bought a lot between $5 and $7 a share. And at the end of the day, BHP and Lundin took them over in the 20s, something like $25, $28 a share. So I look back at it and say, oh, yeah, it would have been nice to get in at 3 or 4, but getting in at 5 or 6 is very rewarding.
Hmm. Could you, because essentially what I'm looking for here is how do you know? Because for Fruto del Norte and like these things they're an exception to the rule, right? Like most of these things, even after a big candle is printed and even after a beautiful assay, they're not going to turn into the massive, takeouts and let alone mines eventually. So how do you know what to chase is essentially what I'm asking here.
Well, I'd rather be really patient and wait for the next big discovery. Like when I get a Filo type of drill hole, that's really wide, really high grade, consistent throughout the interval type of thing. I have a saying that giant drill holes are usually only in the middle of giant deposits. You don't find giant drill holes in the middle of small to medium sized deposits. So if I've got that extra confidence that we've got the making of a giant, my confidence level goes up a lot and I'm prepared to pay more. If I'm getting into something $5 to $7 a share, I'm not looking to hit a home run. I'll take a double. If I feel really good that we're going to double our client's money or triple it, I'm happy. We're gonna buy more dollars worth of that stock at $5 than if it was at a dollar.
Mm,
I just got more confidence.
mm. Is that a rule there? Is that what you're generally looking for? And is a double even worth the risk of exploration? Wouldn't it have to be more in order to comp your risk there?
If I buy $5 to $10 million of stock for my client in one company and it doubles, we just made $10 million. I'm happy. I'll do that deal every day long.
Yeah. I think you're putting me to shame there when we start talking about sizes. So might as well leave that out of the conversation. But it might be, can we
Well,
maybe
that's my
put,
clients collectively, so I've got
yeah.
quite a few clients.
But is there any numbers that you could put to it, like great thickness plus true width, or something else that you can see and recognize as a quick and dirty sort of numerical rule where you see it and you're like, okay, yep, I'm going to buy that.
Well, at an absolute minimum, I want to have a very high level of confidence that we're on a discovery drill hole that we got a shot at 1 to 2 million ounces. And I'd much rather it was at least 2 million because, again, if I go in there and I buy a lot of stock, I got a problem. How am I going to get rid of it? What's my exit strategy? So I want to have a very high level of confidence that somebody bigger is going to come along and take over this company that's made the discovery. I don't usually like to hear that the little company that's made discovery is going to build the mine themselves because the management team probably hasn't built mines. I've seen it lots. We're watching it every day where, a company has a deposit and it might be 2 million, 3 million, 5 million ounces, and they're going to strengthen the management team, bring people in that have the right skill set to build a mine. My concern there is when you're putting that team together, it's more likely their first time ever acting as a team. Whereas you think of Newmont and Barrick and Teck, they've got teams of people that will move around the world building a new mine for them. That's the same team that's been working together doing it 10, 15 times. Um, it's a big task building a mine, and the slightest mistakes can be fatal. So that's why I don't like to see little companies building mines.
Mm.
So again, it's, if somebody announces they've got 10 meters of 5 grams gold or 10 meters of 10 grams gold, to me, I'm probably not interested. That's how you make small deposits. It's either, if it's 10 meters of 10 grams, it's going to have to go a long way, almost a sheet of paper. It's going to have to keep going and going and going along strike or the trend and then down deep to build up millions of ounces. And that can happen. You look at Mag Silver. That was a very continuous deposit, but in general, it just makes my job easier. The wider that discovered drill hole, the better.
What's that breaking? Like you don't want 10 meters. What do you want? 100-meter intercepts at least, or how do you see that?
Well, I got into an Australian gold discovery that I'm still into, back in 2018. The discovery drill hole was the fifth hole they drilled. It was 250 meters of 5 grams gold. Easy. This is going to be a big deposit. And, 6 years later, it's being built into a mine.
Yeah. That's fair. Rare though, too. I mean, I mean, when we
It's
see
rare.
something like
As
that,
I said,
everyone
you got to
recognizes it.
be patient. I don't need to be getting into new stocks all the time. I got my favorite list of stocks, and I'm happy just to sit and wait. They perform. You always want to own the best stocks. The best stocks always lead the charge, and they've gone up. They're really high priced right now. Um, it almost kills me to have to sell any of those positions to buy something new. But I've recently been doing it a couple of times, but not much. I almost have to close my eyes when I push the sell button.
I do always want to own the best stocks, but it feels to me like the best stocks don't want me owning them because they always seem to be so elusive, at least for me. How many would that be? Like, how many companies would you own at a time, though?
Maybe 10.
That's good. Yeah, that's a good.
I
Talk to
don't
me a
want a
little bit more
long
about that
list.
because I'm seeing, and I think the more this bull market grows and people start coming into it from other sides, they might think like, oh, I need a diversified portfolio of 50 positions, 160 positions.
No,
Why 10?
just that's a good number. I feel comfortable following and monitoring. I go visit, all the projects that I own stocks in. My clients like to know that Steve, the geologist, has gone out and stood on the property and looked at the drill core, licked the rock, talked to the young geologists, learning the new technology that they're using and applying. That's my ongoing education for the most part. And I love it.
In your experience, though, over these years, how many good discoveries are there every year to get into?
Well, I used to say we're lucky if we get 2 to 3 good-looking new discoveries a
Sure.
year. Just thinking recently, there's been 2 new discoveries in the last couple of months in Western Canada. Um, Neither of them have giant written all over them. Neither of them are like a Philocorp quality for size and grade, but because of where they're located, they got a pretty good chance of, ending up being something quite significant.
Mm.
So it goes in spurts. What I do like, I'm the kind of guy that like to say patience is a virtue for me. I've just got to, every morning I get up, I scour all the news releases in Canada and Australia, seeing as today, the day that we've got, some no-name little juniors announced what I think is a good-looking discovery drill hole. Usually it's not the day and it only happens a couple of times a year. But what I also like to be reading is that juniors are financing. They're raising money to go do exploration because we need the more companies that are exploring increases the chance we're going to get a new discovery.
Mm. How
Having said that, most new significant discoveries are going to be deep. So we need to mostly realize on geophysics and geophysical surveys, getting better and better, being able to see deeper and deeper in the ground. And then all we got is anomaly, but you got to drill it and hope it's not graphite.
how old are you now, Steve?
67.
When so 2003, you were 47. What about before that? Were you a patient man before that, or is that something that comes with age?
Well, I went to university in Vancouver starting at 18, and I worked every summer, through university for mining companies. I took 2 years off. I worked in an underground copper mine, driving those big yellow trucks up near Kamloops for a couple of years to learn that part of the business. And then when I graduated, I was in maybe 5 years, I became a partner in a geological mining engineering firm. So we do exploration work for other juniors, and one junior forgot to pay their bill one day. They said they had the money to go drilling. We went drilling, and where's the money? Well, we didn't have it. So we ended up inheriting that company, and I stuck my hand up in there and said, I'll run it. I'll be the president. And that's how I got started in junior mining companies,
Hmm.
acquiring projects from companies like Barrick and Newmont and Noranda, doing joint ventures, majors, did private placements in my juniors and whatnot. So I did that for, I think, 12 or 13 years until Rick called me one day in 2003, asked if I'd consider crossing the street. And I started looking at the phone. I said, are you kidding? Guys that run junior companies do not like stockbrokers. We got to raise money with you guys. And that's never a pleasant experience. But I said, sure.
Who's a better stock picker, you or Rick?
Very different. Rick's not a geologist. He's got a lot more money than me. He's got a good Rolodex. So he uses our Rolodex. Um, I'm happy with what I do, my track record.
That's a very political answer. I'll take it. I'll leave it at that. I was only just half kidding though when I asked it, but I want to go back to what you said earlier about made a note about a discovery where it's like you said like they drilled 5 holes and then you started getting interested. You can't really get into or really even form an opinion on what a good discovery is going to be off a one hole though, right? Can you? Or how many holes would you want to see before you size up a position?
Well, go back to Aurelian. In their Fruta del Norte discovery, I think it was their 43rd hole they drilled in 3 years. That was the discovery drill hole in Fruta del Norte. They'd identified and probably delineated a smallish low-grade deposit, so they knew there's gold in the area in the rocks, and they just kept going and drilling different targets and until they hit on the 43rd hole. This company in Australia, they drilled 4 holes. They were just Newcrest, which is now gone, taken over by Newmont. Newcrest had actually drilled a hole, I think, in 1994, and they got something like 100 meters at 3 grams gold, starting 400 meters below surface. So that's pretty deep. But these guys literally did some, modern day geophysics and said, hey, they should have moved over a little more. And I think they moved 50 meters away and they hit that 250 meters, 5 gram gold. And the rest is history. It's an 8 million ounce deposit now with nice copper in it. And it's wide open at depth. It's going to be a 20 million ounce deposit one day, I'm sure.
50
So that
meters.
again, the bigger that interval, that was 250 meters of 5 grams gold. That's a big interval. Yeah, I would have liked to see 500 or 1,000, but that's good enough to get me excited.
But you said 50 meters step out. Is that enough? Does it depend on the system that's below the feet, or like, yeah, how do you judge a step out that's large enough? What's a large enough step out that would get you excited?
Well, I guess they thought that old Newcrest hole was pretty good. Maybe they just clipped the edge of it, or they didn't drill it deep enough. Maybe it stopped the mineralization. Remember, the gold price back in 1994 when that hole was drilled was pretty low. Like it was probably around $400 an ounce. So you got a drill hole. It's 100 meters at 3 grams gold at $400 gold, and it's starting 400 meters below surface. Not good enough. That's why they just walked away and left it.
Hmm.
When they came in 2018, now we probably had, I don't know, 15, $1,700 gold. That 100 meters at 3 grams is looking like it's worthy of follow-up. So geophysics said, hey, let's just move over a little bit and drill a deep hole right through it. And, the rest is history.
Hmm. What is that something you would, or what would get you excited when you see a step out like this? You've seen a hole, you kind of like it. It might be 70, 80 meters of, a couple of grams, let's call it 2.5
That
grams.
doesn't do much more for me.
Well, I was thinking if they follow it up with something it could do, like as you mentioned at the beginning, it could do something for you if it's like a continuous sheet, right? So if they do a 200-meter step out and they come out with a similar intercept, does that get you interested, or does the step out have to be
It
even
does, but you
larger?
don't you don't tend to step out 200 meters. When you got some say 250 meters of 5 gram gold, you're moving over maybe 100 meters.
Hmm.
Might be only 50 meters to play it safe, just until you get 5 or 6 holes into it, so you start to get a better feel for what's there, what you're dealing with, what the orientation is. You're not seeing the grade. Is it kind of similar in all the holes? But in big porphyry deposits like say the Philo Corp, I think I mentioned that they were taken over. That was a big success story. When you've got a really big porphyry copper deposit, usually with gold in it, you can step out 150, 200 meters. For starters, they've probably done a big IP geophysical survey. And if you've got a number of holes in it, that geophysical anomaly, you can almost assume is all mineralized. So a lot of companies will, as quick as they can, they want to identify the footprint of the overall deposit. So do big step outs, 150, 200 meters. But in the early days, start out closer space. If you know it's a porphyry, 100-meter spacing is pretty good. You might come back and do some 50-meter holes if there's some other structures in there that you want to get a little better handle, but you're not going to start just drilling the deposit, a porphyry copper off 50-meter step outs all the time. That's a waste of money. You don't need to do it.
Hmm.
Define the overall footprint size of it first.
Right. Just listening to you speak here, if I didn't know you're a geologist, I would by now. But what if someone's not? I mean, most of the speculators in this space won't be geologists. Is there hope for them? Can we do
Not
it, or?
much. Not much. Everybody says, is there one book that I can get to read? Stephen knows as much as you. So I want my money back. I put almost 50 years into this career. I spent a lot of money, getting to where I am right now. You can't possibly learn it. Um, go if you can go out and look at projects and see the rocks, talk to the geologists, but that's taking up the geologists and the company time. They don't want to say, okay, would you take the day off and give this guy a tour around? He's trying to learn something about investing. They don't, it's too expensive. So, it's really hard for, people like yourself to get on, good projects tours. The better the project, they want the top analysts or top investors coming out. When I went down to see Philo Corp and Lundin Mining, and another high profile one today, I went down to look at their project 2 years ago, and I think there's 75 people on the tour. I'd never been on a tour that
Wow.
big, but
Yeah.
we're talking the Lundin Group and great discoveries. They want everybody coming out to see this thing so that everybody goes home and either writes up doing good research or, new updates type of thing, or investors that are going to go home and, buy lots of the stock type of thing. So it's hard for, the layman to get on a tour like that. It's just too expensive to put all one of these site visits together. So, you want to do that as ideally as much as you can. Um, uh, or I think there's only one newsletter out there that's written by a geologist that's got experience. So you want to have someone like that in your corner, or you want to have someone like me in your corner that's, been a geologist for quite a while, doing this for quite a while. And there's very few, like I said, there's only one newsletter that's got a geologist involved. So to be trying to do this on your own, like I've I've been sent over 1,000 list of people's stock list. Yeah, for me to value them, I just shake my head saying, "Who the heck is helping you?" Obviously, nobody.
Hmm.
I wouldn't touch most of the stocks on these lists, and they're some of them are really lengthy stock lists. So that's the first thing that's wrong. You don't need 50 stocks.
You're not giving me much hope, Steve. I was hoping for hope here, but as
Oh,
a
the
money
wrong guy.
manager, there would be a caveat there and a bit of a bias. I understand you almost have to say these things, but what if I did have a gun to my head? I got to make it in this space. I have to manage my own money. What do I look out for? What do I spend my time paying the most attention to? Is it a specific deposit model, porphyry, IOCG, VMS? Is something else in particular, or is it a specific jurisdiction? What do I pay attention to?
Well, the first thing every investor in this space should own is a lot of the big boys. That should be your cornerstone investment. So the big royalty companies, the big mining companies, then once you got them, that's your cornerstone. You've got good exposure to gold and silver and copper type thing, or uranium if you want it. And then go down the ladder, take some of the smaller ones, call it small mining companies, not the mid-ton, just somebody that's actually mining gold, or mining silver, making some profit, cash flow. Um, but when you go down to companies that all they can say is we've got an exploration project, we've done some drilling, but we haven't hit anything yet. Um, they want you to buy their stock and they're hoping somebody will finance them. But when it's really early stage, it's like you're rolling the dice. And, you can say, bet on management and previous track record. Well, I can tell you, management that's done it before doesn't always do it again. There's just, they, if a management team's had success and they're going out to start a new company, going to look for a new project, people will call them up and say, "Hey, I know who you are. You've had success before. Will you look at our project?" And theoretically, if you don't have a good project to bring them, they're not going to let you in the office. So they tend to get to see the best projects that are available out there, or they can make some phone calls to major mining companies. And a lot of the top success people have worked for majors and they've got friends in the majors. So they might call them up and say, "Hey, do you have anything sitting on the shelf that you're not working that might be a good fit for us?" And that happens.
Hmm.
Um, but it's getting harder and harder to find good projects. So that's where it goes back to we need as many juniors getting funded as possible so that they're going out doing their thing, exploring all over the world, doing geophysics, doing soil sampling, and drilling anomalies. We need the anomalies drilled to get these brand new discoveries.
Well, you're bringing up geophysics, which is also maybe an interesting point. As you said, geophysics is going to become a more of an important tool, even more so than it is right now. What are you looking for? Any basic lines that you can point me toward, or yeah, what are you looking for when you see a geophysical news release?
Well, I just like to hear and know that there's anomalies being developed because that's what you're going to drill. And that's where you're hoping you're going to find some metal in that anomaly type of thing. So I can never get excited looking at a geophysical anomaly. All I can say is, okay, it looks like the last one or the other ones I've seen 15 of them. Go drill them all. Try and pick the best part. Have your geophysicist tell you where he believes the strongest part of the anomaly is to drill the first hole. And that's how you start.
Yeah, yeah. Well, tell me some
Well,
more.
again, we touching on geophysics. It's like we found the new easy deposits. There's still lots to find out there, but they're getting deeper and deeper and deeper, which means we've got to keep improving the geophysical surveys that we have to be able to see deeper and deeper to find those anomalies.
Well, you make up interesting points there, and that kind of ties into what you said before. Is like it's really hard for retail speculators to do this on their own, but then at the same time, and I joked about it before, but it's true. I mean, you're not exactly impartial, right? You essentially get paid if people believe they can't do it alone, and uh, convince me. you'd hold the same view if your compensation didn't depend on it. Why is it true? Tell me stories or tell me mistakes that you've seen people make, or yeah, talk to me about that.
Well, investing in companies that don't deserve to be invested in is not a good idea. Every one of these juniors has a IR promotion department. Their job is to try and convince you to get you to buy the stock. And so they're gonna set up meetings with you and management and their geologists to tell the story. And somehow you've got to be able to see through it all. Um, but I don't know anybody. I certainly can't go look at a early stage project that hasn't been drilled and say this is the one. This has something extra special on it. It's like you got to show me the drill hole. There's no shortcuts.
Mm. What are some mistakes that you see in reviewing those? What did you say, over 1,000 portfolios? So you've reviewed from retail speculators. What are the mistakes that we make most often?
Just buying way too many really early stage companies that the projects just haven't seen much work on it. You can paint the prettiest picture out of nothing. Like when these juniors are telling you the story, they can paint such a picture, they baffle you. You don't know what they're telling you. You don't understand. You don't have the geologic experience.
Yeah. But outside of that, then what is like too many positions? That's kind of the obvious one. Is there another one? Is there like when you see people taking on too much jurisdictional risk, or, investing with the wrong people essentially, or another mistake that you kind of see as a common thread throughout portfolios that don't make money?
Well, jurisdictions, I think, is a pretty important one. Like, I don't like to go into some countries. Juniors working in countries I just don't feel is good country risk. Um, I'm investing my clients' money, so I've got to factor that in. How comfortable am I prepared to go there as a geologist and walk around the property, or am I worried about my safety? Things like that. And we saw in Panama what the Panama government did a couple of years ago to Hudson Bay, basically shutting the copper mine down after they spent $7 or $8 billion building it. Well, I wasn't a Hudson Bay shareholder because I didn't like the country risk. So especially if you're a small company, an early stage junior, and you're going into a high risk country. Um, I don't like to see that. Again, I'm waiting. For me to invest in that company, it would have to be one spectacular drill hole, because then I'm betting that at the end of the day, a major's going to come in and take them over, and it'll be their country risk problem.
Well, but talk to me maybe a little bit more about the mistakes you see people making in their portfolios when it's like retail investors. You said again, too many positions, but what else? What's kind of the most common mistake that you've seen people who lose money make?
Maybe turning that around a little bit, trying to help those investors, what they should be, trying to focus on what they're investing in. Go with management teams that have done it before, got good track records. That's not foolproof, but it's a heck of a lot better than, you just blindly picking stocks because you might, read over a news release and think it's good. Good management teams have done it before. They're probably geologists or they've got a geological team involved that's, helping make the company decisions. So, whether it's betting on the Lundins, for example, groups that have been around a long time, had a lot of success. That's not a bad idea to follow them. There's another kind of company, the Rick Rule and some other people like, called the prospect generator type of company, where you've got a good group of geologists running in a company, and they're out um, doing geophysical surveys and soil sampling and prospecting, the inexpensive surveys to try and identify anomalies. And they'll try and joint venture those properties out or sell them and keep a royalty so that other companies that have money will go out and do that exploration and do the drilling. Your prospect generator type of company usually has a number of projects that are ideally, being optioned out and being drilled. So if they got 10 properties, hopefully five are optioned out and five of the properties are going to get drilling done on it. Um, that's better than just blindly picking stocks. So, there's a number of prospect generated type of companies out there. Get a basket of those wouldn't be bad. Um, those are probably the two wisest ways for, layman investors to invest in. Follow good management teams and prospect generators.
What about yourself? What are some of the mistakes that you made along that career now over 20 years, eh? So yeah, what are some of the mistakes? I mean, you mentioned some of the wins there. What are some of the stuff that you didn't make money on, and what did you learn from that?
Okay. It's more than 20 years. It's close to 50 years from when I started going to university to become a geologist. So it's been quite a while. Um, the I guess I've done it myself. Like when I was running my own junior companies, Barrick took over another big company called Lac Minerals, and Lac Minerals had a property in Alaska, um, and there was no VMS mineralization on the project. And the guys with Lac actually went out and drilled in a new anomaly and had a really good looking drill hole. I think it was about 50 meters of 8% copper and 7% zinc. That's a pretty nice width, and those are really good grades. And I knew the guy, I knew Barrick, and I knew the exploration manager for Barrick, and I called him up and said, "Hey, I don't think that's a Barrick type of property. It's copper and zinc type of thing. If you're going to be selling it, can I try and acquire it?" And I didn't tell him why. It was because of that drill hole. Well, he probably knew why I wanted it, but I don't think I brought that drill hole up at all. And I ended up, beating out a couple other bigger companies to get it. Gave them a better offer, and we were excited as heck. We went out there with the drill and just stepped all around that one hole at 50 meters, 8% zinc and copper type of thing. And we missed on all four holes drilling around and say, how did that happen? That's what we call a one hole wonder. You drill a really good hole and it just, whatever, didn't go anywhere. So I've drilled that hole myself. And so when a company, they might announce that brand new discovery and I get in, um, I don't think it's really happened again that bad, but they might get a couple holes drilled around the first good hole and then it fizzles away or it gets faulted. Faults are your worst enemy.
Hmm.
You can be drilling for 6 months, keep growing bigger and bigger, maybe a year, and then you move the drill over and there's a big fault and it's faulted away. So what you found isn't big enough. It's almost like you just wasted a bunch of money and time drilling this. It didn't get big enough. It's not going anywhere. It's staying right where it is in the ground.
Hmm.
That definitely happens, and you can't really predict when that's going to happen. You just have to hope it all plays out together. Ideally, if there's that geophysical anomaly and you're just marching along drilling, you ideally you want to drill off that whole geophysical anomaly. And if there's a fault, you should see a fault offset in the geophysical anomaly. That might give you an idea where to go drilling. Um, Sometimes it just doesn't work out. Everything's going good and you drill it off and drill it as big as it gets, and it's just not quite big enough for whatever reason.
Hmm. I thought my mother-in-law was one of my biggest enemies, but I'm going to add faults to that list now as well. The list just keeps getting longer and longer. Does I was actually hoping you'd say that overpaying was one of your mistakes, really. Like you maybe got too excited on a discovery, you paid too high of a sum, never got taken out, the market ran out of breath, and you kind of had to exit at a lower price. Because I think that does happen a lot, and that might be a topic to touch upon as well. How do you know that you're not overpaying? How do you even value a discovery? Is it back of the envelope, you know, size math that you're doing there, or how do you know how much to pay for a discovery?
Well, if it looks like if it's a big or really big looking discovery drill hole, um, it's going to grow into something bigger. You rarely get just that one hole wonder or just a couple of holes. Usually, it's going to grow into something significant. Um, there's one example in Australia where a company made a real nice PGM discovery. And at the initial time of drilling, when they first started out, the PGM prices were good. And then about a year to year and a half later, the stock was going higher and higher and higher. And then PGM prices just tanked really quick. And the stock came down. And I couldn't predict what PGM prices were going to do. So, I basically, I sold some up over, I think it went ultimately $8, and I sold some at $6 to get into something else, but I kept most of it. And when PGM prices went down, it went down too, to the point where I said, okay, it looks like PGM prices are staying low for a number of years. I'm getting out of the stock. So that I didn't see that coming. Just I'm not good at predicting metal prices in the future type of thing. I don't think anybody is.
Yeah, that is
Sometimes they just don't work out for a variety of reasons, but metal prices, you always have to be worried about that too. That, none of us want to see gold tank here in the next month type of thing. I don't think it will, but
hmm.
things like that you can't.
And essentially, if you do want to do this long term, you have to ensure that you can make money in any market. And a good discovery always gets bid up, even if it isn't in a bad market, right? Because oftentimes I would see, track records being posted during bull markets. They'd be like, oh, year to date, I'm up that much, I'm outperforming everything and everyone. But it's like, let's look back at, the last 5 or 6 year track record. Let's see if you made money during a bear market too.
Few
Do you?
examples.
Yeah.
We did experience that. My approach, my strategy. During the bear market, I think it was around 2015, 2018. Reservoir Minerals made their big copper gold discovery in Serbia. That was a home run. The stock went probably 50 cents. I think well over $10 before they were taken over. And I waited, they announced their discovery drill hole around the stock jumped up to $1. That's when I got in between $1, 50, and I rode it till they were taking over around $10 a share. About the same time, Fission Uranium and their early partner, Alpha Minerals, announced their discovery in Saskatchewan. And that was a good success story. But those were almost two of the only mining stocks that went up during that bear market. And again, the world needs metal every day we wake up. If metal prices are down, you've just got to have better grades, better quality deposit. But those were two examples where, if an investor owned both of those, they made good money. They probably owned other stock too that they lost a lot of money on. But that approach does work, the new discoveries, if they're good.
Yeah. How would your approach be different if you're not managing other people's money, but just, your own portfolio as a geologist? What would you do differently?
I, I love this, what I do as a geologist. There's nothing more exciting than being involved in a brand new exciting discovery. So like I'm involved in say 10 different companies, most of them are discoveries. I get up and that's all I follow is the good companies. I'm just looking for news or I'm going to look at their projects or I'm talking to management. Um, you don't need a guy like me to follow, say, Newmont or Franco, Nevada. That would bore me to death. That's just number crunching.
Yeah. What about the portfolio building thing? Like, would it still be 10 companies? How would you position size and yeah,
I'd
how would you
rather
do
have a
that?
short list. Because if you have 50 stocks, and you get one or two good winners, you probably have small positions in all 50 stocks.
Mhm.
So if you get one good winner, you got 40 other ones that aren't doing anything. So if you have a shorter list, it's more concentrated. You can have bigger positions in them so that if you get a winner, it's going to count.
Do you when you take on positions and also talk to me about whether or not that would be different if you were just managing your own money, would you buy all at once or do you size up as kind of proof starts coming in and as there's more proof in the pudding, I suppose?
Well, I commonly, if there's a brand new discovery I like, I'll commonly get my clients a first tranche in a stock right then. And then, 3 months later, 6 months later, as the company's doing more drilling, as I'm gaining more confidence that we're moving in the right direction, that there's going to be a happy ending, I'll keep buying more tranches. I think I was just checking this out on a few of my stocks a week or so ago, and I ended up buying, sorry, I ended up buying six tranches over maybe 4 or 5 years. The first tranche was obviously the cheapest that they got in, and the latest tranche was the most expensive. But they're making money on all of it. They've just got a bigger position now. So that's very common. I rarely will buy, that first tranche and that's it.
What does that look like though? First tranche? Is it 10, 25%, 50%? What does that look like?
It really depends on the size of my client's account, because I've got small clients and I've got very large clients. So, the bigger clients are going to get a bigger position.
In percentage, you mean? So if it's a bigger portfolio, you'd put what, 20% as a first tranche, and if it's a smaller position, you do 10, or
Yeah,
what would that look like?
something like that. It's not a hard, fast rule.
Okay. So it's more art than science then.
You could say, I guess. It depends, is there any cash in the account? Am I losing faith in a stock that I feel better in the new one? That's going to help me, decide. Um, it really isn't if I've got a new stock and I want all my clients to own, I literally go through every account and try and fit it in there, according to the size of the account.
Do you keep more cash during a bear market versus a bull market, or vice versa?
I've had my clients fully invested for the last 3 to 4 years. Looking back, that was a good thing to do.
Is that going to
Because
change? Is
things
that
have moved
about to
so
change?
quick. Gold has gone up so quick, so much that, if I would have had 10 or 20% cash sitting there 2 years ago waiting for a pullback, we've had no pullbacks.
Yeah. Is it about to change though? Are you going to start rotating more toward cash, or doing any kind of moves like that in the portfolios?
Well, the first thing that would be really alarming is if I start seeing central banks selling a lot of their gold, I might think that we're nearing the end. That'd
Mm.
make me nervous. I don't think I have to worry about that.
But that would be it. So you would essentially still follow it a bit, top down. You would still kind of look toward the gold price for guidance before going more to cash. Is that right?
Yes.
Okay.
Yeah.
Yeah.
Yeah,
Well,
I'm always, when I say every morning I get up, I'm looking for the next new discovery. I'm also looking for the next one, whatever that might mean, something that is really positive that I think is going to offer, multiple catalysts to push a share price higher. One of those examples, we've seen it happen a couple of times over the last few years when Newmont took over Newcrest. The surviving bigger company, Newmont, announced that they're going to be selling 6 gold mines, producing gold mines. They're too small for Newmont. Barrick's just done the same thing recently. And, if a little company buys that producing gold mine, just about every one of the examples that have bought it, they were just an exploration company the day before. And once they buy that producing mine, now they're a significant producer. That's really exciting. That's very material. And we've seen what the share prices have done in some of these companies. They've, more than tripled since they got the acquisition. So I've gotten into a couple of those right after the deal was announced, and that's turned out to be a good investment. And that's not exploration at all. Both usually what's happening, the mines were sold. They were being neglected by the previous owner. They just thought they're getting long on the tooth, or they're running out of gold, and they've got bigger fish to fry. They've got other new projects that they'd rather put their time and energy into, thinking and those will be long lasting mines. So they're prepared to let them go, and the new companies come out and say they've been neglected. There's been no drilling going on. The best place to look for new gold is right in a mine type of thing. So I've gotten into a couple of those, which is nothing what I normally have before. I've usually been all about the discovery place,
what
but that's
is
not going to happen very often because you don't see two big companies merging very often. It's very rare. In the recent one, Tech and Anglo American merging, neither company has any really small mines, so I don't think anything will be sold out of that merger.
hmm. You said you wake up every day and you go looking for that next big discovery. Where is that discovery going to come from? Is it, I mean, the Yukon's hot right now. Is it Finland's hot as well? Where do you expect it to come from? Where do you see a lot of good work being done?
Well, I don't lose sleep over wondering where it's going to happen. I know there's exploration happening around the world. So believe me, if one of these companies drills a discovery drill hole, they're going to tell you and me and the rest of the world about it. Today's communication, it's easy to get the word out. Um, I would love a big new gold discovery in Nevada, but the problem is Newmont and Barrick pretty well own all the real estate. There's a couple of small companies down there, but I would love a really good Carlin style discovery in Nevada.
Hmm.
Um, I'm okay with discoveries in British Columbia. They tend to be, porphyry copper gold deposits, and they tend to be low grade. I'd rather have high grade. Um, but if it's significant and it's close to infrastructure, that should work out okay. And I like some South American countries, but you're always nervous down there. And I like the potential of Mexico, but the government runs sometimes that's in power is, you don't always have a good sleep at night.
Yeah.
But
Does the drilling cost matter to you? You're mentioning Nevada. That's one of the more expensive jurisdictions to drill. So would you be looking for more potential there because of that? And would any of that matter to you?
not really. Again, if you got a really good discovery drill hole, everything's going to be fine. The stock's going up. They should be able to raise money at a higher price than their last one. Um, hopefully, if they are kind of remote, that might mean in the Yukon especially, there's helicopters involved and they're really expensive. So if you can get to a point where you've got a lot of money, maybe you can build a bit of a road in there or land an airstrip for landing. But sometimes it's just part of the cost of doing exploration. Again, when we say we found all the easy deposits, that's the easy ones to get to. Now we're having to go up more and more remote, increases the chances of needing helicopters. And like I say, that's a big budget. You got to use a helicopter to move the drill rig around. That's expensive.
Sure is. I spent some time in the Yukon this summer, and the rough range that I heard coming from there was about 2.5 to $4,500 per flight hour of the helicopters, and that's for sort of the light to medium helicopters, if I remember correctly. So it
Yeah.
can get really expensive if you're hauling like drill rigs and wood for the drill pads and everything else. So yeah, the
I
cost of the
always
jurisdiction does matter. I mean, I speak to Craig Perry every now and again. He always says size of the price, cost of the test, chances of success. That's essentially what he's checking when he's looking for, one of these big discoveries. Do you have a framework like that? That's kind of, like a catchy tune almost. Yeah, kind of a list or a checklist like that.
Not really, because I'm not really paying attention to where juniors are exploring. I'm just waiting for that first drill hole. Then I'll consider where the jurisdiction is. That's when it matters to me.
Hmm.
Um, yeah, I barely keep track of juniors. Like when I go to some of these conferences and there's lots of early stage juniors there, for the most part, I'm not meeting with them. I'm just going to see, my favorite companies that are in attendance or, I've got friends I haven't talked to for a long time. I want to maintain those relationships and, I'll usually sit down and hear their stories. But for the most part, I'm not just going to go walk up and start talking to some company I've never heard anything about. It's like, show me the drill hole. When you get a drill hole, phone me and
Hmm.
you won't need to call me because it'll be in a news release.
What else, I suppose, matters? And so far, I know you almost have to run here, Steve, but we've been talking about essentially the rocks and what makes a good discovery, but bad managers can destroy a really good discovery, even after the fact, on capital raises and everything else. I mean, there's so many ways that this could go wrong. What are some of the traits that you're looking for when you're looking for, a good manager where you're like, okay, I like the rocks. This is going to be the discovery that I want to deploy capital in, but now I also want to have the right people. What are the right people? What are you looking for?
Well, I guess I've said a number of times, scam artists don't make discoveries. Scam artists are going to raise money and they're going out on the expense trip. They're going to go to lots of conferences, things like that. Their heart's not really in it to find new deposits. So if somebody drills a discovery drill hole, it's good. I'm going to give the person or the group credit right out of the gate. They did something right. Their heart was into it. And then there's a few times where a good discovery is made and pretty quick management realizes or shareholders realize, big shareholders realize that we've got to strengthen the management team. Life has changed. We've got to start adding good quality people to the team that's going to bring respect from the marketplace that helps raise money. Um, and we see that more and more as a discovery is turning into a real deposit. The team always gets strengthened. And, because when they get ready to start doing PEAs and feasibility studies, the market knows that there's good, competent people on the team that have done it before. So that tends to, sort itself out. And if they're not taken over and the feasibility study says it should be good, well, then if they don't get taken over, you start bringing in mine building people to add on to the team so that, they got a better chance of actually pulling it off and building the mine without any mistakes. And you can have that happen like it happened to Silvercrest. And after building the mine and operating it for 2 years out of left field for whatever reason, Coeur d'Alene mine comes along, takes them over. It's so you always get those. I can't think of an example while we're talking where a good discovery was made and it was a sloppy management team that went all the way. They always get strained because guys like me, if you're a significant shareholder, and we've seen this game before, you start voicing your opinion, say, hey, bring some new people in.
What should those new people have, though? Or what is it that you're looking for that I could kind of objectively, leave the art part out of the equation because I don't have 50 years of experience, and so how do I measure it objectively, or how do I judge it objectively? Am I looking for skin in the game? Am I looking for something else? Again, a track record of success. Do they need 20 years of experience, or yeah? How do you judge it objectively?
Well, if you got that good discovery and they've strengthened the team and you got a geologist or a mining engineer or somebody that's, been involved in a number of discoveries, non-technical, but he's got technical people around him, that should give you comfort right there. You like to know that they do have skin in the game. They're good shareholders so that, the shareholders are all aligned. That's a good thing. It's not always required, but it always helps.
Yeah. Does a good management team always have to consist of at least a couple of geologists? Is it when you look at management and
I should
boards?
like to see at least one on the board.
Okay. Anything in particular there that you're looking for when you say one on the board?
Well, ideally, a good experienced geologist that's worked a number of at least the type of deposit that they're drilling. But if he's worked on, most geologists work a variety of deposits, but
Okay.
you definitely want experience on the one that you're dealing with, whether it's porphyry or VMS or gold only.
Well, again, Steve, I know you have to run here, and I've written down a couple of things that we can make a whole podcast off of this conversation. I really do appreciate your time. What am I forgetting to ask you though here on a first pass conversation? What else do you want to leave me with?
Try and get some help. Like there's not many places to go for help, but I know there's a newsletter out there that's written by a geologist. Um, Track that one down would be my first recommendation, and keep learning, doing what you are. But you just can't. There's so much to know in this business that you can't possibly do it just doing it for a little while. It's hard.
Yeah, it sure is. Really do appreciate your time, and hopefully we can do this again soon. But thank you so much for sitting down with me today.
Okay, thanks for the time.